Hey everybody, it's Pete. Welcome to today's episode of today's Best Stock Picks. It's Wednesday, June 10th, 2020. Market had a little bit of profit taking, and quite honestly, I'm thankful for it because pulling back a little bit is very healthy for the market. Any experienced trader that I've been working with over the last 20 years was saying the same exact thing. When is this market going to breathe a little bit? It was getting a little bit frothy where you kind of feel like you're going to be the last person playing musical chairs up there, where it's going to turn around and you're going to be the last person buying. And that's just a natural feeling. It's just a little bit uncomfortable if you're not in an existing trade. It's amazing if you bought some time in March and you're holding on and it just keeps climbing. But even as we saw in Boeing yesterday, some profit taking is going to come into the market. It opened up significantly lower yesterday and actually did not bounce. So we're going to see what's going on today, but I want to point out one thing today. Today is an FOMC day, so we have an interest rate announcement today. We have Apple hitting all-time highs yesterday, Amazon exploding again. So we had a little bit of sector rotation, which was very important to notice yesterday. As the market was trading down, quite a few big tech stocks were rallying. And we had a couple of very active stocks, stocks that have been active, I should say, for the last 2 months, that have been consolidating for multiple days, and in the private community we call that inside days, or we actually, a couple of them have inside days. So essentially what that means, if you're not familiar with the strategy, it means that as stocks contract, they get tighter and tighter and tighter from one day to the next. That contraction eventually leads to an explosion in volatility. It's actually one of the easiest trading setups to find. But then trading it, like we talk about the difference between entry and exit, that what happens in between there is where you actually make the money. So I'm excited to actually point out a few of those today, so maybe you can add them to your trader's toolbox and get involved in some trades. I do also want to talk about, for those of you that are brand new traders, and specifically if you happen to be day trading, there are some unique situations where the edge is changed. Even though you might have some really good looking charts, FOMC announcements are days where the market can get a little bit lighter volume, which makes it a little bit more difficult to trade because liquidity is not the same. Sometimes you don't get that same follow through. And there's another day that very similar type price action happens where you're looking at the charts, but it's not really following through cleanly in a way that you would expect. And that's options expiration. So I'm just giving you a little insight into how I trade in my professional game plan. Kind of fixing my collar here while we're on the screen. Option expiration days and FOMC days, to me, in my experience over the last 20 years, I don't feel like I have the same fluidity to the market. So generally speaking, I'll trade as a day trader. I'll trade pretty actively the first hour, maybe 90 minutes. Then the volume typically drops off right around from 11 o'clock in the morning Eastern time, right up until the FOMC announcement. You'll see the futures jockeying for position before the announcement. Today they're expecting nothing, and we'll see how the market reacts to that. But then here's a key. After that, we typically pick a direction, and then whatever that direction is, normally, again, probability, normally, we tend to follow through. So I'm actually looking for a little bit of a lower opening. The futures are actually flat right now. I would love to see one more day down today prior to the FOMC announcement, just kind of a slow grinding move to the downside in the market. I have a couple of individual stocks we're going to take a look at, specifically tech stocks, and then close at or near the lows in the market, but then have a nice really push the next couple of days. So we'll see how it unfolds. We're going to get into some of those stocks right now. So again, just something to keep in mind. What are the types of days that you find challenging? And for me personally, I'm like, why do I trade these days? I don't make any money. I don't feel like I have an edge. And that's really the big thing. Do you have an edge on those types of days? The answer comes back, no. Why put your money in harm's way? It's just silly to do that. So we're going to go to the charts and we're going to take a look. Oh, by the way, if you find these videos helpful, or if you have any feedback, comments, stocks you'd like to look at, definitely click down and subscribe. And if you'd like to trade together, also click all the way down into the description. And you'll see how we can do that. We have a boot camp. So let's get going. All right. So starting out with that type of play that I was talking about, which was a consolidation play, you can see Zoom has been very, very active. Obviously, it's been something everybody's been watching. Everybody knows about. Quite frankly, I'm on Zoom right now. Most of the world has been communicating for business through Zoom or these types of plays, and Zoom has obviously been in the news. So we've had some explosive moves in Zoom. We've had a lot of attention on Zoom, but now you see we've consolidated where it's not quite 2 inside days in a row, but definitely a couple. The volume has dried up a little bit, although it's kind of still above the normal, but you can see it's decreased every single day during this consolidation, which would normally imply a breakout to the upside. So here's actually the play in Zoom. And I'm actually going to go to a couple of more, DocuSign and Square as well. Two other stocks that have been, I guess you would say, stay-at-home stocks that have exploded because everybody's at home and doing those kind of things, right? So Zoom, and let me go through the other stocks. So Zoom, Square, as well as DocuSign have all had these tighter consolidations. You can see DocuSign, a really tight consolidation yesterday. So what we're looking for there is we're looking for an explosion in volatility and to have a really big red or really big green candlestick today. Now, again, the odds of follow through are to the upside, and that's the direction I'll be looking to play it. And if it does, I'm going to look to hold to the close in these stocks. I'm looking for a really big green candlestick. If they break to the downside, it's against the order flow, so I'm going to do nothing. So that's the game plan in those stocks. But I think it's important to understand the scenario of the trade so that then you can go and find some of those trades. Obviously, we're talking about big tech stocks and how strong they were yesterday, good relative strength to the market. You can see Apple now well bid 3 days in a row, closed on the highs yesterday, broke through this resistance level that we've had set an alert. Remember, every day we talk about setting an alert. Pop through that level. We're still looking to get long Apple. There's no reason not to be long these tech stocks. Along with Apple, AMD, day trading environment yesterday, just to give you a quick snapshot. This is what AMD looked like yesterday, but most of us holding trades a little bit longer. AMD needs to get above 57 and stay there, maybe even 58. Absolutely can still look to be long if it's a day trading stock or if you held it long. And again, I didn't even plan this. This is awesome. This is exactly what we're looking for in those other stocks. You see consolidation leading to an expansion in volatility. So you can actually see this inside candle compared to that one. So this was inside of that one, and you get an explosion. That's what we're looking for in those other stocks. I'm telling you, I didn't plan that. It just happened to be awesome. So again, actually, now that I'm even looking at it, I would probably have an alert set for 57.50 here for a swing trade. Because again, this is, if you're new to the channel, this is one of the biggest things. You don't want to draw the resistance all the way up here. That's simply BS. You want to really get in there and build an argument for a trade. You have to look to say, what's the price it's actually having a hard time getting through? And right now that's 57. So let's set an alert for 57.50 for a potential swing trade through there. If you want to day trade it between there, and it's only 70 cents. I'm not really sure it's worth it, but above that level, have your alert set, we're good to go. A couple of other stocks that we're going to be watching, DT today. Very similar. We need to see this one get above, excuse me, 39. My eyesight's not great, pardon me. Lam Research, we actually got a nice multi-day pause here. We had a gap, a pause, and we're kind of sitting right at resistance. So I actually love when stocks pause at resistance. They tend to explode through those levels. So we can actually say, again, the same spirit of what price is it having a hard time getting through. We paused at that level. We're looking for Lam Research to actually get up and retest that 340 level. So a really nice trade set up there. NVIDIA, sticking with the tech stocks today, right? NVIDIA needs to clear that 370 level to have some room. But again, another good example of a contraction followed by a massive trend day. Facebook as well. So you see the theme here, right? Tech stocks, explosions. Amazon as well. Again, just stick with the money. Why fight it? Even though the market went down yesterday, if you're looking for stocks to buy, you need to spot relative strength, relative weakness. Chewy's an interesting one that a lot of people have been writing in about. The interesting thing about it is that it took out the lows here, which basically trapped all the short sellers and spiked in the other direction. But now we actually traded double normal volume at the highs, which on its own would seem to be exciting. But you tend to want to see that happen breaking out of a trading range or on days where it's kind of well bid and trending. This had what was called a bullish engulfing candle. So it actually took out the lows and took out the highs. So it's definitely something to see, not one that I'll be involved in today because I don't like the fact that it took out both sides. I want to see that clear itself up. If it goes well bid today, then I'll be looking to trade it in that direction. Some other trades, and this is very important. You need to keep some trades on your watch list that might not be forming a trade today, but you don't want to miss them. Car is one of them, where we're pulling back a couple of days. You can see the really unbelievably nice trade that we had in car for about, I would say about 6 days. So that's setting up. So I'm actually looking for lower openings here. Dish, very similar. I'd like to see Dish pull back a little bit more, and SWK, very similar as well. So the three stocks that I just called out, I'm actually looking for them to open lower to find a spot to buy. And then once we get that level, then we're going to be pretty aggressive because we're looking for them to resume that push to the upside. So I don't really have any stocks on the short side again today. Despite the fact the market was down yesterday, I don't really have anything that's screaming at me, wow, God, I can't wait to short sell this thing. So tech stocks carried the market yesterday. I'm looking for some of these stronger stocks that are pulling back, especially looking for those stocks that are making all-time highs to stick with them. Set your alerts in those stocks that I just mentioned before. Do not get involved before then because you're going to get chopped up. Again, we showed, got up to that level, had problem. Got up to that level, had problem. Set your alarm past that level and let it pause there. It could be a daily candlestick pause. It could be pausing for an hour, depending if you're a day trader or a swing trader. Once you clear those levels, and especially if you clear it and stay above there on some lighter volume, you can anticipate follow-through. But definitely watch those DocuSign, Square, and Zoom. We're looking for expansion days today there and some big trend days. Again, if you like these videos, absolutely click down and subscribe. And if you have anything, any questions, definitely click down and leave that to me too. I'll get back to you as soon as I can. Have a great day.